If you are collecting Social Security right now and you have not reviewed your tax withholding in over a year, the IRS might be keeping more of your money than they should. I am not talking about taxes you actually owe. I am talking about money the government is holding on to all year and then giving back to you months later when you file your tax return. Last year, 3 out of every 4 retirees who received Social Security chose the wrong amount of tax withholding. That single mistake cost the average senior more than $3,000 over the course of the year. Some retirees lost much more than that. The form you fill out is called W-4V, and it is one of the shortest forms the federal government has. But the IRS instructions are written in language that feels like a foreign language, and nobody at the Social Security office ever warns you that your situation might have changed. By the time you finish watching this video, you will know exactly which box to check, who needs to file a new W-4V, and how to send it in so the right amount of money lands in your bank account every month instead of the government's. Grab a pen and paper before we go any further, because I'm going to give you a phone number, a website, and 3 specific steps you can take this week to fix this for yourself. Let me explain what W-4V actually does, because most people have only a vague idea of what it is. The W-4V is a form you send to the IRS, not the Social Security Administration. It tells the federal government how much money to take out of your monthly Social Security check for federal income taxes. That is all it does. It does not affect your Medicare premiums. It does not affect your state tax bill unless your state chooses to apply the same withholding. It only controls the federal portion that comes out of your benefit every single month. The choices on the form are simple. You can pick 7%, 10%, 15%, or 25% of your monthly benefit to be withheld. Or you can pick 0, which means no federal taxes are taken out of your Social Security at all. Here's where it gets tricky for most people. Almost everyone picks 10% because that is what their neighbor picked, or that is what they thought they were supposed to do when they first signed up for benefits. But 10% might be way too high if your only income is Social Security, and 10% might be way too low if you also collect a pension or rental income or dividends or a part-time paycheck. The right number depends entirely on what your life looks like right now, not what it looked like 10 years ago. If you found this helpful so far, hit the like button so the algorithm shows it to other seniors who need this information. Now here is something that most retirees never hear from anyone. According to IRS rules, if Social Security is your only source of income, you might not owe any federal income taxes at all. That is right, 0. The IRS gives seniors a special set of rules that says if your total income stays below a certain threshold, your Social Security benefits are not taxable. For the most recent tax year, the threshold for a single filer was roughly $25,000. For a married couple filing jointly, that threshold was roughly $32,000. If your income stays below those numbers, the IRS does not expect you to pay federal income tax on your benefits, which means having 10% withheld out of every monthly check is money you are essentially loaning to the government for free. You will get it back when you file your tax return, but in the meantime, you have less cash to live on every single month of the year. Let me show you what that looks like in real dollars, so it really sinks in. Imagine a senior collecting $2,000 a month in Social Security who has 10% withheld. That senior is losing $200 every single month. Over 12 months, that is $2,400 the government is holding on to. If your actual tax bill for the year turns out to be 0 because your income is low enough, you get that $2,400 back when you file. But you lived without it all year. You might have skipped dental work you needed. You might have stressed about paying for groceries because money was sitting with the IRS earning nothing for you. Even worse, if you are a senior who is under withholding, you can owe hundreds or even thousands of dollars in April, plus a possible underpayment penalty if the amount is large enough. Both sides of this mistake hurt your wallet, but the fix is identical. Subscribe to this channel right now and turn on the notification bell so you do not miss the next video. I make videos like this every week to help seniors keep more of their money. Now let me walk you through the 4 percentages on the W-4V and when each one actually makes the most sense. The 7% box works best if your only income is Social Security and you live in one of the few states that also requires state withholding on your benefits. The 10% box is the default most retirees pick, and it works reasonably well if you have a small pension or a tiny bit of other income, but still end up owing only a small amount at tax time. The 15% box is the right call for many middle-income retirees who have a moderate pension on top of their Social Security. The 25% box is for higher-income retirees who have substantial other income, like rental properties, large investment dividends, or a meaningful part-time salary. But here's what I really want you to understand. You do not have to guess at this. The IRS publishes a worksheet in the instructions for Form W-4V that walks you through the calculation step by step. You add up all your expected income for the year. You subtract the standard deduction for your filing status. You subtract any tax credits you qualify for. The number you end up with tells you how much federal tax you owe for the year. Divide that by 12 to get your monthly withholding target, then back calculate which percentage of your Social Security benefit comes closest to that number. That is how the IRS says it is supposed to work. Now let me address the most common scenario I hear from seniors who write in to me. Many of you have only Social Security and a small pension. Maybe the pension pays $600 a month and Social Security pays $2,000. You look at the W-4V instructions and you are supposed to add everything up and do the math. But the worksheet feels intimidating, so you just leave 10% checked and forget about it for years. That is exactly how millions of seniors end up either overpaying throughout the year or underpaying and getting a scary letter from the IRS in April. If this sounds like you, the simplest move is to switch your withholding right now. Pick a higher percentage if you suspect you actually owe money that is not being withheld. Pick a lower percentage, or zero, if you have been getting a big refund every year and you would rather have the cash in your pocket monthly instead of waiting for the government to send it back. Share this video with a friend or family member who collects Social Security, because chances are they filled out their W-4V the same way you did years ago and they have no idea they could fix it right now. According to the Social Security Administration, the W-4V form is available at any Social Security office, and you can download a copy online at ssa.gov under the Forms section. You can also call the main Social Security number at 1-800-772-1213 and request a copy be mailed to you free of charge. Once you have the form in front of you, filling it out takes about 3 minutes. You write your full name, your Social Security number, your claim number if you have one, and you check the box for the percentage you want withheld. That is the entire form. You then mail it or deliver it in person to your local IRS office, and the new withholding amount goes into effect with your next Social Security payment, or the one after that. There is no fee for filing. There is no penalty for changing your mind. You can submit a new W-4V as many times as you want, and you should anytime your life situation changes in any meaningful way. Leave a comment below if you have a question about your specific situation, and I will do my best to help. Let me give you the breakdown of who absolutely must revisit their W-4V this year. First, anyone who started collecting Social Security in the past 5 years and filled out a W-4V at the start without really thinking it through. Your income probably changed, your tax situation may have changed, the choice you made years ago is likely wrong now. Second, anyone who began drawing a pension since they last updated the form. Pension income stacks on top of your Social Security, and unless you increased your withholding to account for it, you are under withholding and you will owe money in April. Third, anyone who went back to work part-time after retiring. Even a small paycheck from a part-time job can push your total income above the threshold where Social Security becomes taxable, and your W-4V choice from years ago will not reflect that change. Fourth, anyone whose spouse also collects Social Security and you are filing jointly. The combined income test for married couples is higher than for single filers, but the W-4V choice still matters because both spouses' benefits can be subject to tax. Fifth, anyone who has been getting a refund every year for the past 3 years and would rather have the money now instead of waiting until April. That is you, and there is no rule that says you have to keep overpaying just because that is what you have always done. Here is your action plan for this week, and I want you to write these 3 steps down because they matter. Step 1, find the W-4V instruction sheet you received from the Social Security Administration when you first started your benefits. If you cannot find it, download a fresh copy at ssa.gov or call 1-800-77-21213 and ask them to mail you one. Step 2, pull out last year's federal tax return. Look at your adjusted gross income on the second page. Look at your total tax owed on the second page. Decide whether you got a big refund, owed a small amount, or owed a large amount. If you got a federal refund of more than $500, your withholding was too high and you should pick a lower percentage. If you owed more than $500, your withholding was too low and you should pick a higher percentage. If your refund or balance came in under $500 either way, you are probably fine where you are and do not need to change anything. Step 3. Fill out a new W-4V with the corrected percentage that matches your situation, sign it, and mail it to the IRS address printed on the second page of the form. The IRS will update your withholding within 30 to 60 days, and the change will appear on a future Social Security payment. Press the like button if this action plan is exactly what you needed to see today. If this whole process feels overwhelming, you do not have to figure it out alone. The IRS has a free helpline at 1-800-829-1040 where you can ask general questions about withholding. The Social Security Administration can answer questions about your benefits at 1-800-772-1213. Many local senior centers offer free tax help during tax season through the AARP Foundation Tax Aid Program, and the same volunteers will sit down with you and help you sort through your W-4V decision if you ask. You can also use the IRS Tax Withholding Estimator, a free online tool at irs.gov that walks you through the math step by step. You plug in your income, your filing status, and any other income sources, and the tool tells you approximately how much you should have withheld from Social Security every month so you do not owe money or overpay the IRS come April. Before I close out, I want to be clear about something important. Everything in this video is general information based on current federal rules. Your specific situation may be different from what I described. The rules in your state may differ. Before you make decisions about your withholding, your taxes, or your money in general, I always recommend checking with a qualified tax professional who can look at your complete financial picture. What I can tell you is that the W-4V information in this video is based on publicly available IRS and Social Security Administration materials. And the truth is that millions of retirees are leaving real money on the table simply because nobody ever took the time to explain how this short little form works and how much it can affect your monthly income. So here's what I want you to take away from everything we covered today. If your only income is Social Security and you checked the 10% box on your W-4V years ago, you are almost certainly overpaying the government every month and waiting until April to get your own money back. If you have a pension or other income and you never updated your W-4V, you are probably under withholding and you are one April surprise away from a tax bill you did not budget for. Either way, the fix is the same. Pull out the form, do the math, and submit a new W-4V to the IRS this week. It takes 5 minutes. The IRS does not charge you anything. And the difference between choosing the right percentage and choosing the wrong one can be hundreds or thousands of dollars a year in your actual pocket. If this video helped you understand something that confused you for years, do me a small favor. Subscribe to this channel, turn on the notification bell, and share this video with a friend, a sibling, or a neighbor who collects Social Security. I will see you in the next one.